Tony Greco, Senior Tax Advisor, Institute of Public Accountants, talking about the budget. As expected, the Treasurer did hand down a surplus budget of $1.5 billion, so we call him the $1.5 billion man. How did he get there? Well, obviously there was budget cuts, but there were also some new taxes, which was obviously disappointing from that perspective, especially if you're one of those individuals or taxpayers who have to cop up some extra tax dollars. Just a wrap up of what was in the budget, the big ticket items, the new tax scales that come into operation on the 1st of July. There has been a tripling of the tax-free threshold, but that is not going to translate into a lot of tax dollars saved because there are also some increases in some of the thresholds and a lowering of the low income tax offset. So essentially, you're not going to see a tripling of the tax benefits to most taxpayers. In fact, if you earn more than $80,000, there is no tax cuts. Mainly, the main recipients are low income tax holders, those earning between $30,000 and $65,000, which would be the majority of taxpayers. You're looking at $300. So the tripling of the tax-free threshold does not translate into a sizable tax cut. Bearing in mind, 1st of July, we have carbon tax, which also comes into operation. There were some unexpected announcements on budget night. We were hoping that the loss carryback would get a Guernsey, and in fact that was one of the pleasing aspects of the budget, the fact that that has translated into a proposed measure that hopefully will see the light of day. Why do I say the light of day? Because also on the night were some of last year's measures which were proposed, which have now been abandoned, and one in particular is the simplification of tax returns. That measure, which was going to give most taxpayers, or all taxpayers if they chose to, a standard deduction for work deductions. Now, there has been an abandonment of that tax reform measure, so that now is off the table. The other measure which also got the chop was the interest discount. What happened there, well, what that initiative was going to do was give you a discount if you had interest income. It was going to be a fairly small concession worth up to $500, but it was a necessary one that we lobbied hard for because interest receives no special tax treatment. If you've got property, there are large tax concessions, i.e. negative gearing or CGT concessions on sale. If you go into shares, you've got dividend imputation, and that reduces your tax bill when you use those franking credits. But poor old interest essentially gets taxed at your marginal tax rate, receives no tax relief, and this was a small measure which would address that imbalance, which now unfortunately is going nowhere. Especially if you take into account inflation. Your earning power of that interest income is reduced by inflation, and then you've got tax on the gross amount. So it is a poor cousin to some of those other asset classes. We were very disappointed that that measure did not proceed as planned. The other announcement on the night was, or other announcements I should say, in relation to superannuation. We were all expecting an announcement in relation to those who are over 50 and had a $50,000 threshold concessional cap. The rumour or the announcement that the government had made was that those people with a balance of in excess of $500,000 were going to be limited to the $25,000 cap. What happened in relation to that measure was a complete deferral. So unfortunately, it will play havoc for a lot of people over 50 with their retirement plans. They were foreseeing that they could contribute at the $50,000 level. Now, what will happen on the 1st of July is that there will only be one cap. So regardless of age, you'll only have a $25,000 concessional cap limit. Again, it will disappoint many who are nearing retirement and not having the opportunity to top up. That is extremely disappointing for those people. So they're probably going to be a number of those people affected, and expect them to make a fair bit of noise going forward, because that measure that was announced on budget night will mean a deferral for up to 2 years. So it's not until July 2014 that people will have an opportunity to contribute at a higher level. The other superannuation related announcement refers to high income earners, i.e. those earning more than $300,000. Unfortunately, they're going to be subject to what we call a super surcharge. So they'll effectively pay double the current tax rate, 30% on their concessional contributions. So they've got the opportunity this year to contribute as much as they can up to the concessional caps. Bear in mind that if you exceed those concessional caps, you've got that draconian excess contribution tax that can possibly kick in, even though there is some relief for those with excess contributions up to 10,000. At the minute you go over 10,000, you're going to be subject to that nasty tax. The good news was the proposed small business write-off regime will start on the 1st of July. That was reconfirmed on budget night. The legislation has already passed. The ability to write off small assets come 1st of July, it's going to be accelerated. The small business threshold of 1,000 will increase to 6.5, and that's per asset. So if you buy 10 assets at say $10,000, you've got an upfront deduction of $100,000. So that will bring forward the cash flow benefits of asset replacement. So that's a big positive, assuming obviously that the small business has the cash to fund those acquisitions. The other measure that was also legislated, so this is in the bag, is in relation to motor vehicles and small business. They can gain an additional $5,000 write-off in addition to the depreciation that is allowable. So you're going to get an upfront $5,000 plus 15% of the remaining in the first year, and then 30% the year after that. So again, bringing forward the depreciation, therefore bringing forward the cash flow benefit of that measure. So a wrap up, lots of negatives, a few positives. There's no big bang benefit for small business other than those small asset write-off, improvement in the small asset write-off regime. 1st of July, we've got a carbon tax that comes into effect, and unfortunately small business do not get any direct compensation for the impacts of the carbon tax. They will see costs increase, especially electricity, but then there's all the secondary cost increases for all the suppliers that they deal with. They will also be passing on cost increases. So other than the small business measures and other than the loss carryback, there's not much joy in the budget for small business.